Welcome to the Desire to Trade podcast, the podcast helping you develop Forex trading skills for more freedom. I'm your host, Trend Trading. We are in episode 116. Let's get started right away. It's very easy after a while of consuming information about trading to kind of want to learn more and want to learn these new techniques that no one talks about. But most often than not, what we really need to focus on are the basics, the things that might take effort but are proven to provide traders with success. And I was reminded of that in this episode. This episode is an interview I recorded with Barry Burns, someone who I was inspired by through his YouTube channel, and I've been following him since. What I really like about Barry is his perspective of what it takes to really succeed in trading. And although the advice provided by Barry might seem old school and maybe tough at times, it really gets results, and that's the amazing thing. So I won't say any more, but I've been fascinated by this interview, and I'll probably listen to it a couple of times myself. Please help me welcome a trader with over 50 years of experience and a true desire to change the world and make it better, Barry Burns. Barry Burns, welcome on the podcast. How's it going today?
Thank you. It's wonderful to be here, and so far I've had a fantastic day, actually. Yeah, thank you.
Awesome. Pleasure to have you here. The first question I like to ask my guests is, what is one quote that inspires you?
Oh boy, there's so many, but I'll tell you this one. This is the one that I'm actually mentoring a couple of guys. They were just here yesterday, and I shared this one with them. And I think this applies not only to trading, but to really all of life with regard to success in anything. And I first heard it from A.L. Williams, and then I've heard it from other people too. So I don't know who first said it, but anyway, here's the quote. Successful people do what unsuccessful people are unwilling to do. And the operative word there is unwilling. Not that they can't do it, but that they just won't. And a lot of times it's the simple stuff. You know, it's not the hard stuff. It's like, oh, this is too hard. But it's like if you go to the gym. So I go to the gym every day. I do Krav Maga. I lift weights. And I don't feel like going every day, but I do. And, you know, most people, they get their gym memberships in January, right? And they go for a few weeks and then they quit. We all know that that pattern. And, you know, they could do it, but they're just unwilling to follow through and be there day after day after day after day. And whether you feel like it or whether you don't, whether your emotions are, you know, on a high tide or on a low tide, and you just build these habits and you do it. So later on, maybe I'll bring in some examples on trading and how this would apply to trading. But yeah, that's one of my favorites, is that I think more than, especially with trading, which is such a wonderful profession because really anybody can qualify to do this. You don't need a college education. It doesn't matter what color you are, what language you speak, where you live, what your background is, what religion you are. And none of that matters in trading. So it's just a matter of, are you willing to put in the right kind of work in order to be successful consistently? So we can talk about more of what that entails as we go on.
Yeah, I totally love it and totally agree with that also. You've been running Top Trading for quite a few years now, and you've also been trading. So tell us a bit what's going on these days for you.
Well, these days my trading is primarily twofold. Well, yeah, twofold for trading. So the first one is day trading, and I like to day trade futures. So I like to leverage in futures, about 20 to 1 roughly, depending on the market you're trading. So I have 7 monitors, and I am watching the euro, the yen, bonds, gold, crude, and the E-minis. And the reason that I watch those is because those are good non-correlated markets. So the euro or the yen might be doing something one day, and maybe the S&P is flat. Another day, the S&P is really taking off and there's money to be made there, but the currencies are flat that day, or bonds or crude or gold or whatever. So I'm looking for opportunities. I'm not, sometimes people ask me, well, what's my favorite market? And my answer to that is my favorite market is the one that's making me money today.
Yeah.
Actually, with day trading, the one that's making me money this 5 minutes. So not married to any markets, couldn't care less, just looking to make money here. And so, yeah, there's certain days, hey, let's face it, you look at a daily chart of any market, and you're going to see little dojis and little narrow range bars. Well, if you day traded that day, there's really not much money to be made during those days. Those are usually very chaotic, random walk type days. And so you wouldn't want to be day trading that day, that market. And then you look at another one, you'll see a nice wide range bar that opened at the low and closed at the high. And you say, oh, that's a day that would have been great because I could have just bought at the open and closed at the end and cleaned up. So that's why I do that. So I've got one monitor for each of those 6 markets, and then I have a 7th monitor for my execution platform. And then the other thing that I do is swing trading, and there I'm trading mostly ETFs and ETNs, and but I'll do some stocks as well, but I prefer to do options. So I'm not real crazy about trading stocks. Again, I like the flexibility of options, the leverage of options, and the risk management that's available through options.
Awesome. And the thing people like to know also is to go back in time a little bit. And I want you to tell us how you started to trade exactly. How did you hear about trading in the first place?
Okay, well, now we have to go back in history to the days of yore, because I've been trading for 50 years.
Wow.
50, not 1550, yes. So, and the reason that happened was just, I guess, kind of lucky. My dad was a stock trader, and he was passionate about trading, just as I am. So it was contagious, and he was so passionate about it, he wanted to teach me about it early. So he started teaching me when I was 8 years old. I guess he figured I was old enough to start learning how to trade. Well, of course, trading back then was a lot different than it is now. So we didn't have computers in the house. We didn't even have a color TV in the house. We were lucky to have a black and white TV. So trading then, what he would do is he would and he was a stock trader. He didn't trade options or futures or any of the other derivatives. So he would bring over 5 portfolios of 5 stocks, put them on the dining room table, and say, Bear, that's what he'd call me, Bear. He said, Bear, which of these stocks do you think I should buy? Well, I'm 8 years old. I'm looking at this stuff. I don't understand. I'm just learning to read still. I don't know what the heck I'm looking at. And so I tell him, I say, Daddy, I don't know what I'm looking at here. And so, sorry.
That's all right.
Some voice effects there for you. Keep people entertained. Anyway, he would say, yeah, I know you don't know, but, if you have any questions, just read it over. If you have any questions, ask me questions. So he never really sat down and gave me any formal instruction. It was just throwing me into the deep end of the pool. So, okay, so I started reading some stuff, and of course, I didn't understand anything, but I just pick a few things to ask questions about. He'd answer, and he'd say, okay, pick one. So I was like, okay, that one. And so we'd buy, that one, Magnavox. I remember one time we bought, I don't even know if they're even in business anymore, probably not. And then what we'd do is we'd watch those 5, he'd buy the stock. He'd actually put real money on it and buy it. And he'd be there. He'd have me with him when he called the broker on the rotary telephone, and call up his buddy, the broker, and says, "Yeah, we want to buy this stock around this. What's the price?" Because we didn't have direct access. So, he had to ask his broker, "What's this selling for right now?" We had yesterday's newspaper. So the broker would say, "Oh, hold on a second." So he'd go check, and then he'd come back, or he might even say, "I'll have to call you back," because maybe he was busy with other clients or whatever. And then he eventually would get back to my dad. Okay, well, here's the price. And my dad would say, okay, buy between this price and that price if you can. The broker would say, okay, I'll call you back later. Call back later. And then he'd say if he got it or if he didn't, and if so, at what price. Very slow, tedious process, right? So trading back then was just completely different. I don't even know if you'd call it trading, but we weren't looking to invest for years. He was looking for maybe short-term moves over a few weeks, maybe a couple months. I guess you could consider it swing trading. Definitely no day trading. And we would just do this maybe 3-4 times a week. And I think probably, I never asked my dad this, but because he always bought the stock, I figured he probably had vetted those 5 stocks before he brought them to me. Otherwise, he wouldn't have put his real money into them. And then what we'd do is we'd watch all 5. And we'd see how all 5 performed compared to, or the other 4 compared to the one that we bought. And then, when he'd show me when to sell or ask me, do you think we should sell here? And of course, I had no clue. So he was, protecting himself, but guiding me through the process by just actually doing it. And so that's how I first learned. Now, that doesn't really have much to do with how I trade today, but you asked me how I first learned, so that's how I first learned. And I'll just throw this in years later, decades later, when I took my first formal class in trading, and we actually had computers, and I started using Metastock. That was my first computer charting platform. But the teacher that I had at that time, we used Metastock, but he'd say, put your computers away. And what I want you to do is he put a big screen up in front of the room, and he'd say, okay, here's a chart, and there's some graph paper in front of you. I want you to hand draw that chart. And so we'd literally take a pen or a pencil and hand draw every single bar, just copy it onto a piece of paper, and hundreds and hundreds of bars. And we would do that for like a week. Wow. Crazy, right? And, but I got to tell you, I think it was actually very helpful. I think doing that process, there was something about writing those bars down. It gives you kind of a feel for it different than just glancing on a screen like we do today and being able to trade that way. So I think there was something there that helped me internalize price action.
Interesting. Is there something from that time that you still apply to your trading today? Any kind of philosophy or anything you were doing at the time?
Well, it's interesting. I think there's so much I know that I don't even know I know anymore, that I've learned, that I've, it's just at the subconscious level at this point. So I'm sure, like you say, the handwriting of the bars and all that kind of stuff, it did me the good. Now, I don't teach my students to do that. I don't think they would put up with it. And I don't think it's necessary. But I think just kind of getting a feel for the market. And I think also the experience. For 50 years, you see cycles, you see patterns, and they happen over and over and over and over. And so when everybody gets either all exhilarated or they get all worried about this, or, oh, this is a disaster, it's like, no, I've seen that several times in the past. Not a big deal, it happens, it'll happen again, it's happened before, and here's how we deal with it, and we move on. So there's just no substitute for experience, and that's a gift that people can only give themselves.
Mm-hmm, mm-hmm. And did that experience with your father taught you to become a profitable trader? Or because I guess this could be a very good first experience, but then did you move from there to become profitable and making money in the market? Or how did you evolve?
Yeah. Oh, yeah. Yeah, we made money. Mm-hmm. Absolutely. Yeah. In fact, that's one of the ways that I paid my way through college, was with the money that my dad helped me make trading. So,
wow.
Yeah.
And how was it when you started to trade in a more kind of modern world with computers, with screens, with like 5 monitors or 6 monitors? Was that different, or how did you adapt to that?
Oh, yeah. Yeah, that was completely different. So then that was a whole new learning curve that I had to go through. So my dad didn't do much technical analysis. What we did was, we looked at we looked at charts, daily charts, and then we looked at a few moving averages, the 50 SMA and the 200 SMA, and then we looked at the volume histogram at the bottom, and that was it as far as technical analysis goes. So, some price patterns and multi-bar patterns and moving averages and volume. So we did that, but then my dad was big on fundamentals. My dad was an accountant by trade. He was a finance guy. So he knew numbers. He knew how to, kind of like Warren Buffett, he could analyze a company and their financials and really know what to look for. And he loved doing that. And he tied that in with his knowledge of economic cycles in the world and the country and all of that. So then when I learned about technical analysis, and after, like we say, computers came out and direct access and all that, I was like, wow, this is a whole new world. And I really gravitated toward it. I got fascinated with it. And I've loved it ever since. But what trying to remember when I first started out with that, I was with Metastock and we were using daily charts, and then we moved into day trading. And I guess my journey was the journey of anything to do with mastery of any subject. It's really not that different. People say, for example, a lot of people complain, oh, most people don't make money trading. Well, that's absolutely true. That is true. Most people lose money trading. But guess what? It's not any different than if you start a new business. Here in the US, the Small Business Administration says about 80% of new businesses go out of business in their first 5 years. And of the ones that survive, 80% of those go out of business in the next 5 years. So it's true of anything. The minority succeed. And I just see trading as another business like that. And so the path of mastery applies here as it does to any business or athletics or academics. And the path of mastery is essentially, you start out, like when I first saw technical analysis, I thought, well, this looks easy. You just buy when the 50 MA is moving up, or you can apply Fibonacci ratios to your moving average numbers if you want to do that, or whatever it is, or this price pattern, or this candlestick pattern, or this volume spike. And they show it to you in the books or the classes or the videos, and it all looks great until you get into the live market.
Right.
Then all of a sudden it's like, wait a minute, this didn't work like the guy in class showed me all the time. So then that leads you to try different things. Then you keep adding in more stuff and more gurus and more indicators, and then your charts get all messy, and then you get mental overwhelm, and you're like, oh my gosh, now I'm completely lost. I'm feeling dizzy here from all the stuff I'm looking at. And then there's all the promises of the magic golden indicator, Starfleet 5-star demand commander indicator created by a NASA scientist and whatever. It's just so silly and so ridiculous. So what happened, to kind of bring the story around, I started with simplicity, thinking it looked easy. Then added all this stuff, realizing, okay, it's not as easy as I thought. And now I've come back to very, very simple things. And to quote Bruce Lee, one of my childhood heroes, he said, before you start studying Kung Fu, you think a kick is just a kick and a punch is just a punch. Then when you start going to Kung Fu and study it, Kung Fu classes, and the master shows you all this cool stuff, then you realize, oh, a punch is not just a punch and a kick is not just a kick. Because then years later, when you master Kung Fu, you realize, oh, a punch is just a punch and a kick is just a kick. But the point is, you got to go through the process. You end up kind of at the same place as far as simplicity goes, but you learn so much by going through the complexity. And again, back to our quote, most people are unwilling to hang in there, to do that, to fail. And I call it failing forward. They fail and stop. Don't fail and stop. It's like in sports. I'm a huge football fan. And so in football, what they do is and most sports, they do this. They will tape everything. They'll tape your practice. They'll tape the games. And then after the game, then they go back and they review the film, and they show the players, okay, here's what you got to do and change. They do it with golfing as well. They'll videotape your golf swing and make adjustments, right? And then you can say, okay, take those adjustments, go back to the field, and you try to do better. And then they tape that. Oh, got to make a few more adjustments. These are called feedback loops. So you keep getting the feedback and then going back into the game. That's what we do in trading. When I train people on the psychological aspects of trading, then that's what we do. We use feedback loops. We don't just give people cutesy quotes and positive thinking and all that kind of stuff. It's like, no, trading is like a sport. It's a performance-based activity. So to change your performance, we have to analyze your performance and change your behavior, but you got to see that behavior from the outside. It's so hard for us to see it. That's why even professional athletes have coaches, because they need those outside eyes. And as traders, we need those outside eyes as well to give us that feedback and then say, oh, okay, go back in and make those constant corrections.
Mm-hmm. And I can personally say myself how important it is to have this like outside force or outside kind of view to help you know what to focus on and what to improve. I think that's something that really helped me. What else do you think is needed to master trading? Are there like things that you see people do wrong at first and they have to correct to do right after that?
I think most people do pretty much everything wrong.
Okay.
Yeah, it's pretty ridiculous how amazingly perfect people are at being imperfect at trading. Wow. They're just constantly doing everything wrong. So I mean, the exact opposite of what they should do. So I'll give you one example. So I used to go into some of the free trading chat rooms where people would be watching charts, and I did this as an intentional exercise. And what I would now there's chat rooms where there's professional traders and they guide you, and you usually have to pay for those. I didn't want that. I mean, that serves a purpose. That's great. But for my purpose in this exercise, I wanted to go in where it was just all the amateurs who were trading and talking back and forth. And so I did this for a while, and I saw certain patterns. So I'll just share with you one of the patterns. One of those patterns. The pattern was that the market would go up and up and up and up and up, and then people would say, oh, okay, this market is way overbought, can't go up any higher, I'm going short. They'd go short, and then the market would go down a little bit, they'd get filled, and then the market would go up and take out their stops. And then they say, oh, dang it, I can't believe it. Okay, well, now it's really overbought. There's no way this market can go up any higher. I'm going short here. And other people type in, yeah, me too, me too, me too. And then again, they'd all get stopped out. Then they tried a third time. They'd all get stopped out. And then they would say things like, oh, this is crazy. It can't happen this many times. This is statistically impossible. My broker must be trading against me. Or those darn moneymakers are running my stops. And no, that's not what it is at all. All they were doing was trading against the direction of the dominant energy of the money flow. And this is one of the things that I see amateur traders doing all the time. I don't know what it is, and I've done it too. So I know. I've been there. But there's something in us as human beings, I guess, that we want to trade against the dominant energy, not just of the trend, because trend just means direction, and that's not enough to trade. Direction can change at any time. When I say the dominant energy of money flow, I'm talking about the momentum. So I learned a lot in Chicago. I was at the Chicago Mercantile Exchange, had a mentor there. And so just to give you an idea, when you're on the floor of the exchange, that's a whole different experience too, because now you get to not just see lines and wiggles and jiggles in a chart where people, again, they start to think that stuff actually makes the market move. Now, no candlestick pattern, no moving average, no indicator. None of that stuff makes the market move. That's a mapping of the activity behind the scenes. It is just mapping it. Now, what's happening behind the scenes is at the exchanges, and well, of course, most of it's electronic now these days. But back when I was in Chicago, the pits were all open and so forth. And so you could sit there and stand there and you could see, okay, well, there's not much going on right now. The volume, when I say volume, I mean the audible volume and the noise in the room was very quiet. Some guy over there reading an article. There's another guy, he's flirting with a girl in the corner. And it's like, okay, just nothing's going on. And if you looked at a chart, you would just kind of see it meandering sideways. And then rumors, gossip, news, didn't even matter. Didn't even have to be real news. Could just be gossip or rumors that 5 minutes later, everybody says, oh, okay, that's done. But anyway, whatever, something would spark everybody's interest. And then they would go rushing into the pit. And now, again, volume, both in size of contracts and audible volume, would go up. People would be pushing and shoving. That's why these brokers used to hire professional football players, literally just because of their physical prowess in the pit. They could push people around. And basketball players, because they were tall, so they could get their orders in before everybody else. And then you'd see Merrill Lynch putting in orders, Goldman Sachs putting in orders, Citibank putting in orders. We got the whales coming in. So that's momentum. When I say momentum, from a physics point of view, momentum is velocity times mass. So what we're literally witnessing there was velocity, lots of orders coming in really fast. And mass is the weight of the market, which is volume, and you got the big boys coming in with big orders. So when you see that happening, then my philosophy, the little slogan I created is just hook your wagon to the whales. Take your little wagon with your little money, hook it to a whale, and let it ride.
Right.
So, but I see people trading exactly the opposite. They're all just amateurs, back to your question, are constantly trading against that dominant direction of the market. Something in us, and myself included, because I had that instinct as well. And that's why I say good trading is unnatural. good trading is unnatural. And if you think about it, again, back to the fact that most people lose money, we're social beings. We have a herd instinct. And so if you trade by your instinct, you will be trading with the herd, and your money will never be heard from again. Sorry, I'm just coming up with some of these silly quotes here now. But I mean, that's true. You've got to get outside of your instincts. Good trading is completely unnatural. It's going to feel weird. It's going to feel wrong. So this is why we use these feedback loops. That's why we trade stats. That's why we trade certain patterns we know. And but the good news is after you do that for a while and you start making money, then the uncomfortable feeling goes away.
It becomes a habit, right?
It does. You're building habits. That's a very, very good, yes, I love that. I'm very big into habits. And so I love that you said that. Yes.
Yeah, love it. I think this is a really good reminder to kind of go back to what the market really looks like. It's not like the charts and fundamental, like indicators and all that stuff. It's more people who trade and who like make noise, which is interesting to think about. And I think it's also interesting when you think about the fact that you're almost the only one at your home trying to look at the chart. So that probably means that you have some things you look for more than others, some indicators, maybe some candlestick pattern. Are there some things that you prefer to look for in the market or that you've kind of used over time and you stuck to those?
Yeah, there's several different trade setups and strategies that I use. So yeah, I'll give you a few of them. I mean, there's nothing really fancy schmancy. I'm not using any ancient Phoenician numerology or anything like that. This is basic stuff, like I say, when I went to Chicago, I'd already been trading for a while and I thought it was all that because I was making money and my trading method was very sophisticated is the term I would have used then. The term I would use now is overly complicated. And so I went to Chicago because I hired a floor trader there to work with me. I just dumped 5 figures into his living room and said, teach me. And so he did, and I got an apartment out there. But what was very interesting was that his trading method and those of his friends, they were just so darn simple. I mean, they were ridiculously simple. I went with the intention of showing him, oh, here's my, sophisticated method. Aren't you impressed? I never showed it to him because after seeing what he was doing, and of course he was making a lot more money than I was, he was making millions, I was embarrassed with what I was doing. So I'm like, okay, time to regroup here. So what I do now, I've got several different things that I'll trade depending on the iteration of the market at the time. I love trading triangles. Everyone's heard of triangles. Nothing new there. I trade trend continuation patterns. Again, nothing new there. There are a couple trade patterns that I trade that I've never seen anyone else trade. Be hard to explain audibly. You need to more see it visually, but I call one of them the reload pattern. And that's where we see a trend, let's say it's an uptrend, and momentum comes out of the market. And we wait for that momentum then to come back into the market. So I'm big on cycles. There's all different kinds of cycles. And one of the cycles is momentum cycles. So you could be in an uptrend without momentum. And so I wait for that momentum to die down, and then I wait for it to, boom, pop back up. And those are just really great trades because the nice thing about a momentum trade is, well, by the very nature of the energy of momentum, it's big, fast market moves. So it's just fun to see your P&L go up real fast. And you don't have to sit around and, wait as the market goes up, fills you, and then just kind of hangs there. Nothing as frustrating as the market not really going up, not really going down, just kind of hanging there. So I rely on momentum a lot. I've got a cycle indicator that I use that is just astonishingly great at finding final cycle highs and final cycle lows. And it's not a proprietary indicator. It's a modification of an indicator that's on everybody's charts, but you have to modify it a little bit, and then there's certain patterns. So just like there's patterns on price bars, there's tradable patterns on indicators as well. And you got to be patient. This is another thing most people are unwilling to do, is to be patient and wait for these scenarios when you have an edge, as we say, a probability that favors you. Mm-hmm. And to go back to one of your previous questions, I would say that's another thing that I see a lot of amateur traders having problems with, is that they are way too impatient and they just are working with false assumptions. lot of false assumptions. One of them being that they think that we, as professional traders, trade more frequently than we do. And
Right.
my friends and myself, we probably take like 1/10 as many trades as most people think we do. And so a lot of people are guilty of over trading, and I've been there. And that was one of my cardinal sins that I had a tough time overcoming until finally I realized, you know what? The market is most of the time just a random walk. It's just moving chaotically. And periodically, yeah, it gets into line, it creates an orderly pattern, and we get a probability scenario. But until that happens, I'm keeping my powder dry and I will be patient. It's almost like playing chess. Chess is not a real popular thing anymore because people would rather play video games on their Xbox or their Sony PlayStation and get, that adrenaline rush. Don't look for an adrenaline rush in trading the markets.
Yeah.
Trade it more like chess, where you're sitting there. These guys who play chess, they'll sit there for 3 hours to play a game, and they might sit there. 30 minutes might be for one move, but boy, that one move could determine the difference in the whole game. And people don't have the patience for that anymore. They don't want that. They want the fast paced action moves. So everybody's now like going into Bitcoin and all this kind of stuff because it's moving. Wow, this is it. And so they call it a good market. That's the term they use. It's a good market. That's not necessarily the definition of a good market just because it's making fast moves. So we want to know, can we establish a probability scenario? That's what we want to trade.
Yeah, that's really interesting. And I think there's a balance between finding the right market to trade now, because like we said in the beginning, you're not going to trade something that doesn't move, but you have to find the right one. But at the same time, you don't want to jump into like everything and be everywhere at the same time, which is interesting.
Right.
I'm curious to know, let's try to maybe buzz the myth a little bit. Do you have like an average of number of trades you take every day or per week, so that just people get an idea of like what they can expect? And for someone like you who's been trading for 50 years?
Well, yeah, so that would be a day trading question. So in a day, looking at 6 different markets, and by the way, I trade very, very fast time frames. So I've got to add that qualification in there. This is not using 60-minute charts. And the time frame depends on the market and the volume of that market. So just give you an example. So for the E-minis, for example, I use 3 charts. I use a 1,000 tick chart, a 3,000 tick chart, and a 9,000 tick chart. And I'm primarily looking for setups on the midterm chart, the 3,000 tick chart. Okay, and I might get, now, let me qualify this. I don't trade 6.5 hours every day. Back in the old days, I used to trade 13 hours. These days, yeah, I know, because I would trade starting when the DAX would open. I would trade the DAX in Europe, and then I would trade the Euro, and then I would trade the US market. So it took 13 hours to go through that whole cycle every day. But again, I got my 10,000 hours in fast. Yeah. So these days, I don't really need the money. So, but I still love trading. So I only trade for like 3 hours. Okay. So let's put that into context. And the other thing is these are really pretty fast charts. So, and I'm trading 6 different markets. But yeah, I'll get maybe 3 to 5 trades a day. It just depends. But it's so variable because like you said, and I love that you said this because it's so important for your listeners to understand, there's days when you just shouldn't be trading. There's nothing's going on. So, it's frustrating to sit there for 3 hours and not take a trade, pack up your stuff and go to the gym. But you just, I don't know, you just after a while, the way I look at it is I'd rather keep my money. I think the biggest motivator for me was the pain of losing money. So after you lose money for so much, you just, I don't know, not everyone, but for me, I just said, okay, I'm willing to be more patient because I just hate losing money, and therefore I'm willing to be patient. I actually, you said something interesting earlier too. You develop these habits, and I almost get into like a contemplative state, mental state when I'm trading. It's very actually relaxing. It's like I'm meditating, and I'm just sitting there watching them all and breathing with the market. The market has a respiration to it. These are the cycles, it moves up, moves down, higher highs, higher lows, higher highs, higher lows. That's like the inhale, the exhale of the market. And then sometimes it just It doesn't really move at all. It's like, okay, that's cool. That's interesting. But because I've got 6 non-correlated markets, I would get more trades. Now, there's days if I'm trading the E-minis, there'd probably be 2 days out of the week I wouldn't even take one trade if that's all I was trading. And then there'd be like maybe 1 day a week where I'd only take one trade, but it lasts pretty much the whole day. And it's just, there's like maybe on average 1 day a week that is what I call nothing but net day, where the market just either opens at the close or opens at the high and closes at the low, or conversely opens at the low and closes at the high. And got a way of kind of establishing whether I think today is going to be one of those days or not. And then if it turns out to change in the middle of the day, we can always get out. But those are the days that most of the money is made. And the rest is just making, a few $100 here, $1,000 there. And then those days is like, jackpot. But they occur every week. So, yeah, I'm very money motivated. And so, I don't know. But again, you know what? I think I need to add here too. Trading's not for everybody. Just like playing chess, it's not for everybody. There's nothing that's for everybody. So, you try and see if this is for you, if you can like this lifestyle, or if the day trading, I think, is harder. Swing trading is a lot easier because it doesn't require that same type of concentration and contemplative mental state. And you can have a job, 9-to-5 job, and do your swing trading because you can just do it off of daily and weekly charts. But again, you're not going to get as many trades because each bar represents a whole day. And so the opportunities just don't come across as often.
Yeah, that's interesting because I know it's going to be half and half. Half people listening to this are going to day trade. The other half will swing trade. I personally now only swing trade because I like to do other stuff in the day. And I would say I take between like 0 and 3 trades a week. Do you have like an average for yourself of number of trades you take, or just so people get the right expectation from the start?
Right. Again, that's going to depend on how many markets you're looking at.
Right. Yeah.
So, there's certain people who only trade one stock. I don't know, where they'll just have maybe 2 or 3 stocks that they say, well, I get to know the personality of these stocks. That's fine. That's one way. Another people have a small basket of maybe 20 stocks that they trade, and that's okay. What I do is, again, I have a basket of about 50 somewhat non-correlated markets. So the beautiful thing about the financial markets today is we can trade exchange-traded funds on all kinds of stuff: countries, currencies, commodities, ags, and so you've all got all these different markets that you can trade. So it affords you more opportunities. And then we've also got software that can do scanning for, scan 6,000, 10,000 stocks, whatever, depending on wherever you want to put your volume requirements and restrictions at. And so, but I think, if you're getting 1 to 3 swing trades a week, that sounds about right to me. It sounds pretty reasonable.
Cool. And one of the reasons why, because I used to day trade as well in the past, and one of the reasons why I stopped is because I find it's pretty hard to manage kind of life and like all the other stuff I'm doing, so like the podcast, the videos, with day trading. And so I admire you because you're doing both. You're doing like all the videos and the education and teaching with day trading. So how do you manage your day exactly? Do you have some tips on that?
Absolutely. Yeah. Glad you asked that. All right. Back to your word habits that I love. So I get up in the morning, and again, this is probably different than the way most people imagine a day trader. And I just trade out of my home. I've got my own office here. So got my own beautiful place here in Southern California, Los Angeles. So anyway, I get up just like I'm going to regular work. So I take a shower. By the way, take a cold shower. Not out of any sexual frustration, just to wake me up. And so, make sure I'm literally shivering. It's almost like cryotherapy. And then that invigorates me, gets the blood flowing. I eat a very healthy breakfast, oatmeal, and some greens. I've got a green drink that I use, and that gives me some good energy. I'll have literally, talk about habits, 3 swallows of coffee. That's it. 3, not 2, not 4, 3. How crazy is that? But I'm serious. So So I got a routine down pat. So and then I'll come up and I'll come to my office and I have my breakfast and then I do some meditation. And that only lasts 15 minutes. And then I read some personal development. I always have a personal development book that I'm reading. And I'll do some reading in that. And then I go outside because I want to get outside in the fresh air, fresh wind in my face, sun, take my dogs out, throw the ball, get myself moving. So motion, gets you going. And so I'll do some Tai Chi Chuan. I have a Tai Chi Chuan Yang form that I do every day. I do that, and then I chase the dogs around to get a little cardio going, go up and down the stairs a bit outside, and I come in and I'll open up my trading platform and very casually just, pull up everything, take in a view of, get my trading platforms all set up, put in my support resistance levels. For that, I usually do the night before, but just in case anything happened overnight that created new levels. And and I just go to it. I just sit there and analyze it, and I've got my own little routine of step 1, step 2, step 3, step 4, step 5 as to what I'm looking for. And literally, that's what my trading method is now. It's a 5-step checklist, and it's always in the same order, going through those 5 steps. So very orderly, very habitual, and that's it. I'm done. 3 hours, I'm done. Some days I only trade 2 hours. Some days I don't even trade. Depends on what's going on. And then after that, I eat lunch, and then I go to the gym and maybe pick up some groceries or whatever, come back, spend some time with the family. And then mostly at night is when I do my videos for YouTube or my blog posts or work with students, answer emails, stuff like that.
Cool. So you're in California, which means that the New York session will be starting at 6:30 there, no?
Correct.
So do you trade from the open or do you trade later on?
No, it's funny. Most people trade the open, and that is when there's most volume. That's true. But again, I don't really need the money anymore, so I just more casual in my trading now. So, by the time I get all that stuff done, it's about 9 o'clock. So, yeah, I'm 9, even 10. So what I'll do is I'll take a view. This is a little interesting side note here. So usually they say that lunchtime, the market's real quiet. And that is true. That is a meta pattern that is generally true. The problem is everybody knows that. So once everybody knows something, that's about the time it stops working. So, and we would see this in Chicago. What we'd actually do is we'd hang out, and normally the big guys, they would hand over their trading to the fledglings, the interns, whatever. And basically they were just told, do no harm. Just don't screw anything up. And these guys would leave to go to lunch, and then they'd sneak back in during lunch. Not every day, but just every once in a while. And so we learned to just sit there for a while and watch. And if the whales came back in, then okay, they're going to move this thing when the retailers are not watching. That's what they want to do, because they don't want the resistance of the retail orders. They want to, and this is why you'll see a lot of times on, especially daily charts, where the market will gap up overnight over a resistance level. It's because specialists, market makers, so forth, they don't want to deal with it. They don't want to deal with people selling into that or taking profits into it or whatever. They're just like, no, we're just going to gap over it the next day. Sorry, sayonara, resistance level. So it's kind of that same principle. These guys don't want to be tracked. So they're doing everything they can to channel orders through all the different exchanges and routing processes and so forth. So anyway, I've noticed a pattern that, again, maybe occurs once or twice a week, where during lunch, there's a big move. And so I always look at that. And if it doesn't occur during lunch, then I don't do anything until like around 10 o'clock California time. And there's usually a nice move out of lunch. And so that's the first trade that I'm looking for every day. And once in a while I'll trade the open if I'm up. Just kind of depends on my schedule. But usually my wife and I, we stay up kind of late. And I mean, she's still the love of my life. We are so madly in love with each other that we don't even watch TV. We just sit and talk for like 3 to 4 hours every night. And that's it. We just sit in the bed and we just talk and talk and talk and talk. We've been together for 5 years, and we can still just talk for 4 or 5 hours every single night without any distractions. And finally I say, I got to go to bed. It's getting ridiculous. So, yeah, sometimes we don't just talk, but anyway, it's just amazing. So I have a lifestyle now. I guess the point I'm getting to is I've got this fantastic lifestyle. So I don't have to get up early in the morning and do that. I can just trade for pleasure, a little extra income. Then I take the money that I make from trading and I invest it in other things. So businesses, real estate, stuff like that.
Mm-hmm. Cool. I think that's pretty interesting. Now we need to go back to one of the first things you said during this interview, which is the idea that unsuccessful people are not willing to do what successful people are willing to do. What are these things in trading that successful people are willing to do, or successful traders are willing to do, that the others are not willing to do?
Wow, that's an endless list. All right, let me give you a few. So one of my mentors, okay, I did a lot of old school stuff. I told you about, handwriting charts. I don't think many people would be willing to do that, but I did that. And later on, one of my mentors, he said, even though we had all the computer technology and all that stuff at that time, he said, Barry, what I want you to do now, and he was a rough old Green Beret, so he wouldn't say it that way. He'd say, what you're going to do now is you're going to print out your charts at the end of every day, and you're going to mark them up the way I show you. And you're going to bring them to me every week. And I said, Ray, I don't need to print out the charts. He was in his 80s, so I just figured he wasn't, familiar with technology. I mean, he traded screens too. He's a screen trader, but I said, really, those days are over. I want to save a tree here. I can analyze my trading on the monitors, Ray. And he'd say, no, you cannot. Tell you, do what I tell you to do, or get out of my life. Wow, get out of your life? He's like, that's kind of harsh. But, he was a great guy. Actually, we became great friends, and he actually stopped charging me for mentoring even, because he said, and he didn't use that quote, but he basically said, Barry, he said, you are the only student who does everything I tell them to do. And that was one of the examples. So I thought he was nuts, but I'm like, okay, I don't want to break this relationship. I want to keep being mentored by him. So I'd print out my dang charts every day in color, and I'd mark them up. He showed me how to notate them and so forth according to his method. And then I'd have my stack, and we traded together like once or twice a week. And the rest of the time, I'd trade at home, and then we'd get together once a week at his girlfriend's house. He was in his 80s, and his girlfriend was like 40. So he was quite a character. But anyway, no, she was a trader too. She was a good trader. So then we'd go through the charts, print it out. And I got to tell you, the old codger was right. There's something about printing out the charts on a piece of paper and analyzing them on paper instead of just on the monitor.
Yeah.
And that dramatically improved my trading. And then writing notes of, okay, here's the stuff I did wrong. And actually, again, creating logs. Now everybody has their trading logs. Well, the trading logs that I use, so most people wouldn't print out their charts and do all of that. Here's another thing most people are unwilling to do, and this is what I teach my students to do, is to, yes, keep a trading log. I've got my own little custom trading logs, but you don't need to, it's not where you got in, where you got out, what time, all that kind of stuff. Your broker can give you all that. The key to my trading logs are, okay, what was I feeling when I took this trade? At the moment I'm executing this trade, just be aware of your feelings. Don't analyze it, just be aware of it. Number two, be aware of your thoughts. So, for example, going back to the earlier illustration I gave of people in the trading room, I learned that if my self-talk is saying, this market can't go any higher, I'm wrong. As soon as I notice my brain self-talk saying the words, this can't go any higher, that would make me want to go short because I think it's overbought. And the term overbought even implies it can't go any higher. And that is, it couldn't be more wrong. The odds are the market will go higher if I'm saying that. So you keep track of this. You keep track of what you're thinking, what your thoughts are on every trade. And I started to see, just giving one example, I started to see that pattern. Like 90% of the time when I was thinking, oh, this can't go any higher, it did go higher. So then I can use that information later because I was somewhat aware of it. I had a general awareness that, yeah, this is happening. But until I put it in writing every single time, and then I looked at the data at the end of the week and at the end of the month, and I realized, wait a minute, I had this self-talk that the market can't go any higher 60 times. And out of that, 58 times it did go higher, and I went short. I had an awareness that I was doing it, but I didn't realize it was that bad. And so now, we've got a whole list of rules that I've created in working with traders in the top 20 most common mistakes that traders make. That's just one example. And so I give this list to people and I say, every trader is different, but here are the most common ones. See which ones you struggle with. Log every single trade, what you're thinking, what you're feeling, what mistake you made. And then at the end of every week, accumulate those numbers and see what your unique mistakes are that you are habitually, going back to the word habit, habitually doing that maybe you weren't fully aware of. You just had this kind of vague awareness of. And now we're going to use this piece of paper as a mirror. This mirror is going to show you, here's the truth. This is what you are actually doing. This is your behavior, and it's worse than you thought. Again, needing that outside influence, like we talked about, athletes need that from their coaches. Well, this is your outside influence saying, yeah, here's the facts. This is your tape of your game. And what's cool is I've done this with traders in my own office, face to face. We do this for weeks and weeks and weeks. And at the end of the month, we line up in one column how much money they made or lost. And in the other column, how much money they would have made or lost if they would not have made those habitual mistakes that are most common to them. And I would say in about 90% of the cases, if they just stopped making those mistakes, they're already a profitable trader today. And yes, that is it's so fun for me to look over, to show that to them, and I look at their face, and there's such a sense of satisfaction when I see that awareness come over their face. It's like, oh my gosh, I'm already a profitable trader. I said, you are. You don't need to get any more gurus. You don't need any more moving averages. You don't need any, fancy schmancy stuff. All you need to do less, actually. Not more. You need to do less. And the less is cut out all these mistakes you're making. These are all amateur mistakes. These are the things that the herd does. And it's going to feel a little uncomfortable. But you know what? Feels more uncomfortable to me? Losing money. I'm really uncomfortable losing money. I don't know about you. But here's the facts now. Let's work on that. And it's really inspiring to them. That gives them motivation to do it. But let's face it, back to being unwilling to do it. It's not a it's not a glamorous thing to do to sit there and write down all this stuff and all these logs. And I encourage people to do it on paper. People always want to do it in Excel spreadsheets and all this kind of stuff. It's like, oh man, I don't know. Maybe I'm the old guy now who is old school, but I think it has more impact if you physically write it down with pen and paper.
Yeah, I totally agree with that, and I've totally seen the difference. And I think the thing we're talking about is really when you see the difference between, like, just a tiny gap between losing money and being a profitable trader. It's only these small mistakes, and right. I think so often we make always the same mistake. Like, it's only one or two things most of the time.
Mm-hmm. I agree with that 100%. Yeah. 100%. Yeah, there's a movie, I'm trying to think of the name of it. It was about football. Al Pacino was in it. And I think Oliver Stone was the director. Can't think of the name of the movie. But anyway, Al Pacino's the coach. And he's coaching this football team. And he says, gentlemen, football is a game of inches. He says, you need to fight for every inch. And the team that gets the most inches wins. It's not about yards. It's not about 100 yards to the touchdown. It's about every play fighting for every inch. And trading is very much like that. So yes, I agree with that 100%.
And the other thing that made me smile is the fact that every time I had a drawdown, and I'm not talking like the traditional drawdown, but the drawdown where I made mistakes and everything. Every time I had that, the number one way I was able to get back was to print all my charts and to look at all of them, write down everything I didn't do correctly. And that's always the way I got back all the time, which is really interesting. I like it.
Really? So, well, congratulations. You're one of the few who's willing to do what unsuccessful people are unwilling to do. I rarely hear people who do that, so I'm impressed.
I like it. So how can people find you better if they want to connect with you or reach out?
Several ways. I would say the best way is just go to my website, my blog, topdogtrading.com. And there's no marketing on there. It's just all blog posts, which is all free education. So I do a lot of videos, articles. It's all tutorials, free tutorials. I have a very popular YouTube channel, very active. There's over 100 videos on there. So just go to YouTube and type in Top Dog Trading, and tons of videos will come up, and you can watch those free videos. And then, if you like some of the stuff you see there, I would say start there, consume my free content. And then we do have some places on my website at topdogtrading.com where you can actually sign up for a free mini course. And again, just go to the blog for that. I don't promote sales very much. I just give away a lot of free education, and then I educate people into my formal courses. So this way they get to know me, my personality, my trading style, whether what I'm doing makes sense to them before they would actually take a formal course. And if they don't resonate with what I'm saying, good. I'm glad we found that out before. And if it does, then that's cool too. Happy to work with them.
Yeah, and awesome YouTube channel. Really like it. Full of content. So I think people should check it out. We'll have all the link in the show notes as well. And Barry, what kind of goal do you have for the future?
Wow, that's a great question. I was just talking to one of my real estate partners today, and we were talking about that. He's in his 40s, and I'm in my not 40s. But anyway, we're talking about our futures, and and we're both at the same place. It's like, I don't even ever think about retirement. Retirement is not on my to-do list. It's just I actually did retire for a while because I had made a lot of money and was able to live off the passive income that I was able to create off of that. And I was a lot younger. It was back in my 30s, maybe late 30s, early 40s, and I did that for years. And I got bored out of my skull. I did all the things, traveling, got the nice cars. I mean, that's cool. I still got that. But yeah, did all the fun stuff and played around all the adult games. But it's just not very satisfying. It just isn't fulfilling. And so that's when I came back and I said, I love trading, so I'm still going to do it. I'm just going to only do it for 3 hours. And I love teaching. And what do I want to teach? Well, I teach what I love, which is trading. So I get a lot of satisfaction out of helping other people. So when I get students, I always invite them to tell me more about themselves. What's our goal here? What's our first goal? Because money is just pieces of paper. It's a means to an end. So, let's reduce stress in your life. Let's pay off the cars or pay off a loan or a credit card first. Let's attach this to something very, very tangible. Get your kids through college, or maybe you want to fire your boss. Whatever your goal is, you tell me. But it's exciting for me to work with people when I know exactly what they want, and it's not just more pieces of paper. I also, one of my biggest things for myself is to continue to contribute more. So one of my favorite charities that I work with is the SEVA Foundation, SEVA, and it's seva.org for anybody who wants to look it up. So what we do is we heal blind people. And if I were to say to you, you could heal a blind kid today. The kid would be blind for the rest of his life, and you could heal his blindness for $50.
Wow.
Would you do it? Well,
of course.
I know you would, of course. Yes. And I think most people would as well. So that's one of the charities that I work with. And so one of my goals for the future is just to continue to raise more and more and more and more money for them. And I think that's another important aspect of trading is when you're trading, have a goal bigger than yourself. So that will help you, hopefully, at least it helps me, get over a lot of these mistakes of over trading, of trading against the market, all the stuff I know I'm not supposed to do. But then I say, well, this looks good. You just get this intuition. It's not part of my rules, but it looks kind of good. Okay, no, if it looks good, it isn't good because now you're back into the herd instinct. So, if you're thinking about the blind kid, it's like, well, I know I shouldn't do this, but, oh, wait, there's a blind kid that needs to be healed today. Then, at least for me, that's a really good psychological motivation to say, okay, back off, step away from the mouse, and let's just keep our powder dry until we get a really good, solid, high probability trade. And then, again, being old school, SIVA lets us just automatically send them money every month. And I used to do that. Now I stopped. Now what I do is I actually literally handwrite a check because, again, it just kind of gives me that visceral feeling that, okay, how many blind kids did I heal this week? And that's what keeps me going. My challenge is always to heal more and more blind people. So that's one of my goals for the future is because I think, obviously these are third world countries that we're dealing with here, and they don't have the resources, and the economy is very different there. So $50 goes a long way, and the doctors donate their time. So that's why we can do it. And it's really just cataracts is what it is. It's just cataracts, but they don't have the technology to do what in Canada or in the US or the UK or Australia would be a routine operation. But in Bangladesh, it's not a routine operation for the people who live in these areas. So they don't even have access to it. So something that simple, but for them, they're blind for the rest of their lives. We can make that difference. We've got that leverage. It's just like leverage in the options market, leverage in the futures market. Well, here we have leverage in doing good. Being part of the wealthy countries, let's use our leverage to help those who are disadvantaged economically. And those people would be not only blind for the rest of their lives, but unemployable, poor beggars on the street forever. Well, dang, that really motivates me. So, yeah, that's my thing. One of the people I admire most in the world is Bill Gates because of him and Melinda putting together the Bill and Melinda Gates Foundation. And, that's what he's done. It's like, well, for the rest of his life, he's out there helping people to change the world. And so that's kind of, definitely not comparing myself to Bill Gates or Warren Buffett or any of those guys, but they're models for me. And that's the model that I'm following. And that's the future Barry Burns and what I want to accomplish and give to the world for literally until my last breath.
Yeah, that's an amazing lesson. I like it a lot. And Barry, we have one last question we ask the guests at the end of every podcast. If you could give only one piece of advice for traders in one sentence, what would that one sentence of advice be?
That would be one sentence. You can tell that I'm very verbose. Hard to keep me to one sentence. All right. Listen to more Desire to Trade podcasts.
Wow. Yeah, that's a good advice. I like it.
Yeah.
Thank you so much, Barry Byrne. It's been a pleasure to have you here on the podcast today. And I'm sure people will get a lot of value, and they should definitely reach out and see what you have out there for sure.
Well, thank you. It's been my pleasure. I've enjoyed this, and I hope I've given value that can help some people out there and turn their trading around.
So guys, that was it for my interview with Barry Byrne. I really hope you liked it. Some really great advice I think shared in this episode. I hope that you will take action on it and that you're going to do the best to implement everything we talked about. If you want to connect with me after the show, check out the Facebook group over at desiretotradecom.com/group. And don't forget to leave a review if you enjoyed the podcast so far and if you got results from all these interviews. That would be really awesome to leave a review on iTunes or whatever platform. And I'll see you guys next week for the next episode of the Desire to Trade podcast. Ciao.